Today we're talking about closing costs, budget, loan officers, everything that you need to set yourself up right before you go looking for a house. We're talking about what can you really afford, and this is looking past the purchase price of the house, because having a house means property taxes, homeowners insurance, you have grass upkeep and other maintenance items that comes with owning a home, and some people aren't prepared for it. Maybe right now you're renting or you have a roommate and you share the cost. Well, if something breaks down, you might have a landlord that you call to fix all of those things. But if you're saying, hey, this is $1,500, what I pay for rent, I want to stay around the same area in as far as a mortgage payment, well, you might want to pad that number with some couple $100s just to make sure you can cover some of those items that comes with owning a home. And we're going to talk all about that, because the most important thing is determining your budget. And if you don't have a budget spreadsheet or something that you use to kind of plan your money out to see what's coming and what's going, I have something in the link below that you can click on to get started so you know what you can afford before you purchase a home. But I want you to know you're gonna need a pre-qualification or a pre-approval before you start house hunting with your real estate agent. You need to find a loan officer to get this pre-qualification or pre-approval, and most people make the mistake of just going to the bank down the street or a bank that they normally bank with. But I'm here to give you the secret, because you want to check more than one lender because they will compete for your business. But first, a loan officer matters because they're the ones that runs the numbers, they determine your interest rate, they look at your credit score, debt to income ratio to figure out how much house you can afford. When you apply with the first lender, don't just take the person that you first talked to as, this is my lender I'm gonna go with. What you do is apply with the lender, get a loan estimate from them. This is gonna show a breakdown of all their lending fees, all the closing costs, down payment, your monthly payment, property tax estimate, a full financial picture of what it's gonna take for you to buy a home and stay in that home. It's called a loan estimate. Take that loan estimate, go to a second lender, do an application with, ask for a loan estimate with them, and then provide those loan estimates to both of those lenders and say, hey, once you compare it, you might see one gives you an interest rate of 5%, another one may give you an interest rate of 4.75. And maybe there are some things where they have some costs that vary between the two. Well, say, hey, I had this loan estimate from a lender and they got me 4.75. Can you beat this? Can you lower my closing costs? Is there anything that you can add? And if they want your business, guess what? They're gonna do it for you. And guess what? It's happened to me. So I'm not just talking about myth or theory. It can happen, and it has been done time and time again. Also, check reviews, check their history on being responsive, ask your real estate agent for a recommendation for a lender, because they've worked with people and they know their track record of closing deals and meeting deadlines for closing, and they'll be able to refer you to somebody that's specific to your type of situation and that handles loans that you need. Here's the thing, you can tell your loan officer or lender, this is my monthly budget amount for a house. What price point can I get approved for that's gonna be within my monthly payment? And a loan officer can work on numbers for what you're requesting. So I'm saying, if you're pre-approved for $500,000, but based off of your monthly payment, your loan officer might tell you, then you need to look for a $400,000 home instead of the $500,000 cushion. And that's why I talk about having a budget ahead of time. But needless to say, you have your letter and you're ready to go house hunting. You feel good, you know what your budget is, you know what price point you're trying to stay around, and now your real estate agent's gonna start helping you finding houses in that price point. So where do you go to get more bang for your buck? Some people might prefer to be in the city loop, city limits, because they just wanna commute 10 minutes, be at a grocery store, be able to walk to different shopping and other local activities. But if you're the kind of person that you want your home to appreciate a lot quicker, and it's more of an investment for you to do this house purchase, then you might want to think outside the box and not necessarily look in the city, but look elsewhere where it might not seem so popular now, but outside the city limits, more into the suburbs or slowly developing areas where you see a lot of schools being built, businesses moving to, a lot of commercial infrastructure development. You will start seeing also neighborhoods developing there, and it may look like nothing now, But those areas are usually a gold mine, especially if you're someone that likes to see your money work for you and see that investment and appreciation come out on top. Also, for the areas you're looking at, try to drive around that area if possible around nighttime, just to see what the activity looks like at night. Because sometimes seeing a home or a neighborhood during the day, it looks one way, but things kind of shake up at night, and you want to make sure that you're cool with what you see during the day and at nighttime in that area. Also, I get this question a lot. Where's the safest place to move? Or where do people like me live because I want to live there too? According to fair housing laws, cannot steer you into a certain neighborhood or area in order to buy a home. So I always tell my clients, hey, ask your friends, family, people that you might know that might live in the area that you're trying to go into, and just get their feedback and their opinion. In addition, there are plenty of sites that talk about school ratings and crime rates, and I definitely say, hey, here's a link, check out the school rating for that school, check out the crime rates for that area. I'm putting those links at the bottom just in case you might want to do your own research. So what we can focus on is what's important to you in a neighborhood. Maybe it's lot size, maybe it's having things to do for kids in the area, like a neighborhood having amenities like a splash pad or a park. Those are factual type things, not necessarily, I'm gonna show you something based off of my opinion, but I can say, oh, the neighborhoods over here, they have a lot of houses that are on larger lots for sale. We can go check out this, or we can go check out that. So try to narrow down kind of what is important for you in a neighborhood. So now you've done your house hunting, you're about to put in an offer, go under contract. There are other expenses that people don't think of. They only think of their down payment, and there's a lot more than just down payment to buying a house. There's other costs that come associated with purchasing a house, and it's gonna affect your pocket. So we're gonna talk about some important terms that you need to know so you can be prepared. Term is option fee. This is what you're gonna pay when you put in your contract just to have the seller take the house off the market, and basically it says, hey, I'm trying to hold this house for about a week, a couple days, so I can do my inspection, think about it to make sure this is the home I really want to buy. That's your option fee amount. And it can range between maybe $100, $250. It's pretty much whatever you choose to say, I'm giving the seller to hold this house and take it off the market. The other term is earnest money, and this is pretty much like your promise to buy the house and go under contract. This money goes towards your closing costs, and it's refunded to you in certain scenarios, like if you back out during the option period. But that amount can range from 1% of the sales price of the home, or even up to a flat amount of $3,000 or $5,000. Home inspection. This is a term you want to know and get familiar with, because this is your opportunity to hire a third-party inspector to come look at that house during the option period. It's almost like having a mechanic come look at a car before you buy it, to check up under the hood and make sure there's nothing that seriously needs to be addressed at the moment, or to give you a heads up that something might need to be replaced or repaired in the future. That's your home inspector, and that can range between $400 and go higher depending on how much you want them to inspect, or how old the house is, or if there's other additional services you want the home inspector to do, or checking a pool. Appraisal fee is another term. This is going to be paid before you even get to the closing table, and your lender is going to order the appraisal to be done on your home. It pretty much is basically having a third-party appraiser come look at the home to assess the value of the home. The lender wants to know that the house you're buying isn't costing you more than what it's worth. And that appraisal fee can range between $400 or even as high as $600. The next is title insurance, and this is something that can be negotiated for the seller to pay or for the buyer to pay, but basically the title company is going to do a search to make sure you have the true right to own that home. The next is closing costs, and this is a big one because a lot of those heavy fees are going to come as part of those costs, and this can be covered by the seller, this can be covered by the buyer, or sometimes the buyer can have assistance to help them with pay some of these fees, but expect to come out of pocket for something. And if you don't have to pay any closing costs, that's great, but you want to be prepared to have this ready just in case. Closing costs can range between 2 to 5% of the purchase price of the home. So let's say the home is $300,000, you can expect to pay at least $6,000 to $15,000 for closing costs, not counting your down payment. So let's say you put 3% down on the home, you might want to expect an additional 5% of the sales price to have ready for closing cost fees, but your loan officer is going to give you an estimate of what those closing cost fees are going to be. And that's why it's good to have a budget or some type of savings account where you're preparing to save up for these funds. And if you haven't already talked to your loan officer about it, you can ask them to look into down payment assistance programs that can help with some of these costs, or you can look into maybe some local banks that, if you're already dealing with a lender that's local to your community, they may offer some incentives or programs for like hometown heroes, people that work in the healthcare industry, or firefighters, or police officers, or government workers. They might offer something to y'all to where it can help you pay or cover part of your closing costs. So remember, strategy beats emotion. I know you just want to jump online, send all these houses to your real estate agent, let them know that you're ready to go look for houses, but you got to start somewhere, and it starts with what's in your pocket, and make sure you have a budget that's ready to prepare to handle a mortgage every month, and also the upkeep of maintaining a home. And then also with the lender, you want to make sure that you compare between 2 to 3 lenders, let them fight for your business. And remember, budget for all the costs, not just the down payment, not just because you think you might qualify for a program. Just be prepared to budget for the additional cost of what it's going to take to get you in a house.